Inhaler so I don't die. We've got CNBC on with us this morning so that when the job numbers release, we're going to bring those up. Again, remember, if job numbers go down, it means the Fed is doing their job. If the Fed is doing their job, then people worry less about rates and the market pushes higher. If job numbers come in high, then people say the Fed needs to be more aggressive and likely push the market down. With that said, we've got the breaking news. I guess the job numbers are coming out right now. We could add that to the screen. It's likely the job numbers are going to come in a little stronger. So let's see what's going on. I guess it's kind of freezing. So I'll just give you the update right now. SPY just dropped off a cliff.
Off of a number. That's the highest number since February.
Job numbers are high.
22 when it was 714,000. If you look at manufacturing payrolls, they were 19,000.
Holy shit.
Expectations.
Job numbers are really high.
3.4. We crashed the half-century barrier. A new post-cycle low. That is unreal when you think about it. And average hourly earnings month over month up 0.3, which matches last month, which matches October, which matches August, which matches April. We've had a lot of 0.3. That's pretty much the low water mark until you get to March, where it was only up 0.1. In January, that's 21. In January 21, when it was unchanged. If you look at year over year, a bit of a different story. 4.4%, not too bad. Sequentially, at least for the moment, following 4.6. And when you look at 4.4% on average hourly earnings, that actually is the lightest going all the way back to August of 21. August of 21, where it was 4.3. If you look at the work week came in at 34.7. 34.3 is the low water mark. 34.7 actually ramps us up to the highest since February of last year. That is a big jump, something to pay attention to. And finally, labor force participation rate, also pretty good news, 62.4. 62.4 actually equals the high water mark, which was March at 62.4. That's really good news. To find a higher one, you have to go to March, right after COVID hit. So that's March of 2020, where it was 62.6. So we're looking pretty good there. The underemployment rate, or U6, ticked up a bit to 6.5 in the rearview mirror. 6.6 in the rearview mirror, 6.5, and 6.5 had been the low. So it's not too bad. We only moved up a bit. So to summarize, much better than expected. Yields jumped from basically 338 up to 347, 348.
Okay, we're good with that. So what came in? Job numbers came in hot. What happened? Market dumped. The SPY was sitting at $414 and like almost 50 cents. Where did it go? It lost 3/4 more of a percentage, down to 411 and change. What's going on already? Buy the dip. Buy the dip. We've been seeing that. So I'm going to talk about the SPY because there are important ranges, but we'll let that play out for a few minutes, and then we can talk about Amazon, Apple, and Google. What they're doing right now is buying the dip. The SPY went down to 411. It's back at 413. So we'll talk about key levels of support and resistance of the SPY. Let's get into that first, and then we'll drop into earnings. Okay, everybody, take a pen, take a piece of paper. Here's what you're going to see. Crazy support at the $407 level. We're not there, but based on this morning's price action, it would not surprise me if we see the SPY drop to the 407 range at some point today. What is the next level higher where you should see support if we don't make it to 407? It would be 411. So again, 411 is the next support level up. After 411, it's basically 415. It's about 3 cents under 414.97. So again, if the SPY and if the markets reject the 415 level, you're going to see 411. If it rejects 411, you're going to see 407. If it goes down to 411 and bounces off 411, then expect the markets to trade SPY in between 411 and 415 most of the day. You're going to see a lot of choppiness, a lot of back and forth. If you see a buy the dip mentality, which is what we saw for most of January, then you're going to see us use 415 as support. And once it breaks and holds 415, then we're going to go up to yesterday's high, which is 418 and change. But in this case, it'll be 419 is the next level higher. Again, real easy because it goes every 4 points. 419, 415, 411, and 407. Okay. Now let's speak about the tricky freaking analysts and what they're doing. Okay. Because understand, institutions, big money, big banks, those analysts that come out with price targets, you might think they're here to support what you're saying. Oh, Apple, we reaffirm on Apple that our price target is 185. You know what I say to that? Bullshit. Okay. Apple should go down. I looked at the Apple earnings, disappointing. I listened to the Apple call, disappointing. You've got a Tim Cook saying, if it wasn't for supply chain issues, we would have sold so many more iPhones. Yeah, and if my mom had wheels, she'd be a freaking car. You could say anything. It doesn't mean that it was true, and it doesn't mean that it would come to fruition. So I'd be cautious about Apple. Again, they seem to be dying the dip. Apple was down as much as 4%. I actually saw it turn green overnight for a little bit. Same with Amazon and Google. You know, let's just break out those stocks right now. Let's talk about the earnings, talk about what could potentially happen because you could get decent plays out of those today. So let me go back. Okay, first bit of breaking news. This came from Unusual Whales. Retail trading orders have accounted for 23% of the market's total volume in January. All right, so let's understand what that means. It means retail traders, the same traders that got involved with stocks during the start of the pandemic in 2020 and they were buying out, and the same retail traders that were basically pushed out of the market because their losses were so significant in last year are basically coming back into the market, and they're coming back into the market full force. So when you see the market ripping higher, 11%, 12% for the month of January alone, understand a full year return after a bad year like we saw in the market last year would be like 28, possibly 30% increase this year would be amazing for the market, and it would be historically correct after last year's pace of declines, the fact that we see an increased bump this year. But we've only been 1 month into trading, and you're talking about we're already in double-digit returns, which for a full year would make sense. So please, I'm saying be extremely cautious. Retail traders affecting the market. Again, SPY levels of support and resistance. We've got 419, 415, 411, 407. I've already mentioned that. As far as dark pool levels go on the SPY, and you guys know I love to talk about that because what people do under cloak and dagger, and I say people, I mean the institutions, when they're buying or selling large allotments of the SPY, and I'm talking about 1.6 billion was offloaded at $416.71. That to me is bearish. Additionally, 1 billion was reported at $410.68. That would be bullish because you see the 411 support and you saw the 418 rejection level. Here's what the Apple said. Apple said global smartphone sales have fallen. Worldwide shipments suffered their largest ever quantity decline from October to December, falling 18% to 300 million units. So why Tim Cook thinks that recovery will just flip a switch and be back, I'm not really sure. Let's talk about Google. Google or Alphabet, earnings per share, $1.05. Revenues came in at 76 billion, estimated 76.5 billion. Now, what's important about Google is their fourth quarter operating income was pretty decent, 18.16. Revenue ex tech 63 billion versus 60. So Google is mostly in line. Amazon disappointed. Amazon net sales 121 billion was supposed to be 126 billion. Amazon sees first quarter operating income 0 to 4 billion. The estimate was 3.52. So understand they're telling you operating income could be 0 for the first quarter. So it's all about growth. When people talk about growth of tech stocks, single digits is bad. Why? Because their forward PE, price over earnings, is generally in 23, 24, 22. You look at AMD, you look at NVIDIA, you look at Google, you look at Apple, even Meta is back up there, which is funny because you're talking about these companies are having single digit growth. So if their price per earnings is priced out at a 23 ratio, and you're talking about they're only going to grow 6%, 8%, then they're missing the mark. And that's the point. So what frustrates me is these analysts come out and they reaffirm these price targets that are a little ridiculously high right now based on the earnings. Okay, because they were wrong. Analysts were wrong. They said earnings were to come in stronger. They're not. They're coming in weaker. The cost to refinance debt is going up as interest rates go up. So understand, all of this is putting pressure on these large conglomerates, yet the analysts who should be revising their price targets are reaffirming their price targets. They're telling you they're still going to be correct. So I would be careful. You're either going to see a buy the dip mentality, which we've seen every day but one this entire year, which was last week. One of these days, again, it's not going to be a buy the dip. It's going to be a continuing fade the market the entire day. Okay, so what else do we have? Oh, I just lost my last story. Apple, Google, right? Ford came out with earnings, and Ford's probably off 5 or 6% this morning pre-market. Understand, Ford is still at a higher level today than it was last week. So the fact that you take Ford at $12, Ford from $12 to $14, now they miss earnings. They had a $2 billion loss. So the market sells off Ford. It's down 6%. Ford comes back to $13 and let's say 40 cents. Well, guess what? It's still 7% higher than where it was 8 or 9 trading days ago. So Ford came out. They said like this to earnings. They fucked earnings in. I mean, they really screwed the pooch here. And yet the stock is still off 7%. But if you look at it, it's 7% higher than where it was 11 trading days ago. So people are like, oh, well, it's selling off. I'm going to buy the dip. No, it could actually go lower. Same with Starbucks. Starbucks came out with earnings. Let's talk about their China year-over-year sales. Down 29%. Well, we heard Starbucks was a return to society, a return to normality play for China, a reopening play. Well, their sales, their same-store sales in China are off 29%. Other parts of the world, all in all, it's up 10%. So 10% up, China down 29%. I happen to think things are still going to get extremely bad in China, meaning they're going to get worse than they are now. Satellite imaging still shows bodies lined up outside the morgue due to COVID. So they're losing, I think the number last I heard was about 9,000 people a day. Let's remember, a couple of weeks ago, they said only 6,000 people died from COVID in China, and then they revised that number to 6,000 a day. So that's a little disturbing. Okay, so that's the information on Ford. Apple had its first profit miss since 2016. Revenue came in at $117 billion versus $121, which was expected. Understand the expectations were still brought down. Apple's gross margin of 42.9 missed versus 43.8, which was last year's gross margin. So again, margins are coming down, costs are going up. The implied movement off earnings, Apple was supposed to be around 5%, Amazon 9%, Google 7%. All three missed, yet you see after hours, they were buying these stocks back up. So, I mean, if I had to guess what I thought was going to happen, I definitely think we would see, I would be shocked, put it that way. I would be surprised if we saw a buy the dip mentality today. Yes, it's going to start out that way until proven otherwise. So if I had to give you my direction of the market, what's likely to happen, and I'll give you my best case, worst case scenario right now, we're sitting at 412.50. What's going to happen at market open? Well, they're going to buy the dip. They're going to push the SPY back up close to 414, maybe 80, something to that extent. So you're talking about 0.5% up on open. So I believe they're going to continue to buy the dip. As soon as we hit 414.90, 414.80, I think the market's going to drop right back down to the level that we're at now, and it's going to have some sort of a battle, and that'll be probably around 10:15. So I'm giving you what I think the price action is going to be for the first 45 minutes of the day. Start here. We're going to spike up. We're going to drop back down. It's going to hover like this. And then that's the key point. If they're continuing to buy the dip, you're going to see it come back up and you're going to see something like that, okay, like a W. However, my opinion is if we get back down to the 412.50 where we're sitting right now, we're going to drop down to the 411 range. Let's remember my strategy yesterday. I said Apple would probably go to 151, maybe 150 and 50 cents, something to that extent. That was one of my plays yesterday. Got in, made money on that one. The second play was Snap. Snap was up 4 or 5% pre-market. I said, don't be surprised if we see Snap run 10, 11, 12% higher. Boom. I also spoke about Upstart. Upstart was up 8%. You know where Upstart went as high yesterday? It was up 27%. We could talk about Carvana, which has had support. I've talked about used car dealerships for a number of days, AutoZone, CarMax, but I focused on Carvana. Carvana, which I was speaking about at $10.78, and I said we're going to breach $11, went as high as $18 yesterday. So that went back down to $14. We could talk about Lucid. Lucid, which got pressed off the Saudi Arabia rumors that they were going to buy Lucid, right? Went all the way up from $8 to $15. I mentioned the dark pool level. Somebody sold 1.47 million shares of Lucid at $15. Then it went down to 13. You might have thought it was over. I think I checked this morning, and I think Lucid's back in the $12 range. So understand, just because you don't get that instant gratification, big money is telling you what to do. So if you're saying to me, man, I don't even know how to use dark pools, I don't know how to use any of these algorithms and flows, well, then you need to go ahead and join our Discord. You need to put a little, invest a little. I mean, I think we're $34.99. We offer the same information and more that some of these platforms that charge $100, $150 a month. Ooh, be a platform member. You'll get live trading. Well, shit. Romeo offers live trading on our platform 2 to 3 times a week. He teaches you how to use the orbs. He teaches you how to use candlesticks. If you're unfamiliar with that and you're just going with a general buy the dip or sell the spike mentality, you're going to lose over the course of your lifetime of investing. And you're investing not to screw yourself, not to give you action, but to improve your financial future. It's just as simple as that. Let's just see what other story I have today. So here's the interesting or the I guess I won't call it interesting here. Current situation, all right? NASDAQ was up 3% while the Dow was down 100 points yesterday. The VIX looked like it hit a new low. Bonds are up sharply like we're in a recession. When we're in a recession, bonds go up. Gold down like higher rates are coming, but are they coming? Again, people expect the Fed to ease up or pivot a little. And crude oil is up like we avoided a recession. So again, the markets are mixed. The mentality of the market is mixed. So what I'm going to suggest to everybody here, and it doesn't matter what stock you pick a freaking stock. Pick one ETF. Follow it like family. There's a trader on Twitter, I think his name is Mance, and all he does is follow Coinbase. So the fact what Coinbase exploded like up 29% yesterday, I think he had a return of something like 3,000% on some of his trades. Understand, his stock to pick like family is Coinbase. We have other traders who like Win Casino. We have other traders that follow Starbucks or Apple. Getting back to Apple. So I listened to the Apple call. I saw the Apple report. I see these analysts are reiterating price targets of $190, $185. Apple sitting just under $150. Here's what I think. I'm going to give Apple 1 or 2 days, trading days to play out and hover around the range. And then I expect Apple to go down lower. I expect Apple to revisit at some point in the next couple of weeks, $135 a share, which is tough to do when these analysts are reiterating price targets that are higher than where the stock is right now. But I think the true valuation will come out. When we talk about valuations of S&P companies or companies in the SPY, you're talking about, on average, historically, the forward PEs have been somewhere in the 17 to 18 range. When you look at Google, Apple, Amazon, Tesla's probably in the high 30s again. These have to come down. The PEs have to come down. And since we're not talking about earnings, or earnings are coming in less, the price has to drop at the same rate. If the price doesn't drop at the same rate, then their forward PEs are going to be higher, meaning the valuations are going to mean those companies are too expensive to invest in. So yes, I expect some of these companies to come down. When we look at Amazon, let's say Amazon last week was what, under $100. Now it went as high as 13, 12, something like that yesterday, maybe 114. It's back down to 109 pre-market. Understand, Amazon shitty earnings, their AWS, which is their cloud service, came down, missed expectations. So that'll have an effect on some companies like DDOG, DDOG, or Cloudflare, which is net, the symbol, NET. So again, you could look at similar plays and see how it pans out. We can go back to Meta, and Meta was great yesterday. I made $8,000 on Meta calls. I got in the morning. It wasn't even like I carried them overnight. I got in. I said the market's about to push higher. I don't agree with it, but one stock that will likely push higher will be Meta because it'll be a long-term investment for a lot of these people. However, Meta is sitting at $189 or $185 when it was, in the 120s. Let's remember when it was 220, I mentioned that individuals that I knew at certain hedge funds were buying at 220, 215, went down to 202. Well, from 202, it dropped significantly. In fact, I think Jim Cramer apologized for giving support in Meta. Maybe it was the last earning periods when Meta was dropping to maybe $120 or $110 a share, something like that. He was apologizing. What an idiot. He should have been telling people I was wrong, but this is the time to enter, not this is the time to sell. So it's very important you get the right strategy down, because I hate Jim Cramer, but even if he was telling people to buy Meta at the 120 range, he would have been correct. It upsets me so much when a stock will spike, like SoFi off earnings a few quarters ago was $8.88, and he's telling people to buy at $8.88, and then it went back down to the $5 range. So there are times to buy certain stocks, and if you like certain stocks and you put them on your watch list for a long-term investment, it's great. It doesn't mean you have to enter in today. If you like Apple and you like what Apple's doing, but I say that Apple's going down, you could put it on your watch list for 125, 130, 135, and you could slightly start to add into it. Yeah, I see that you hit PayPal good yesterday. You got in, got out. That's great. You got scared. You pulled out at 400% and you left a lot on the table. Yes, that happens. Even the guy that I was just talking about with Coin that had a massive return, he sold on open and he was like, my account is up 2,000%. But understand, Coin went even higher yesterday. So when I talk about the ranges of the SPY, even if your stock is pumping and it's pumping in a good positive way in the morning, but I say to you, okay, if they buy the dip, the SPY is going back to 418 and we're sitting at 412. Understanding the SPY is going up another 1.5%. If your stocks are up 9, 10, 11%, we mentioned Upstart was up 8%, then 12%. By the time the market was done ripping, it was up 26, 27%. Again, a little too high for me. No stock should move 27% in one day. I don't care how it's shorted or not shorted. Same with Carvana. Carvana at some point yesterday was up 35%. It's okay to take profit. That was like the third straight day or the fourth straight day Carvana was ripping. So let your stocks consolidate. Let's say today's an outflow day. Let's say the SPY contracts back to 411, or even it's a sell-off day and you see something lower than that. Let your stocks go down. Make sure you get out of them and have the idea to re-enter. Do not have FOMO. Do not have a fear of missing out that you need to re-enter as soon as it drops 2 points, because that certain stock might drop more points than 2 points. Again, stocks that I've seen that had outflow, even with yesterday's strong day, I was looking at Boeing, which seemed that like people were selling, taking profit. Starbucks, same thing, selling, taking profit. So again, I would be cautious. Let's remember that dude that was interested in Carnival Cruise Lines. And I said, don't short Carnival until you see outflow, until you see selling. So again, Carnival went up another 5 or 6% yesterday. I think it actually passed the $12 mark. Let's just see right now. Again, if you guys have any questions about any specific stocks, please ask them on the sides. Let's see where the SPY is sitting right now. We're sitting at 411. So you had that drop off the job numbers. And let's go back to the job numbers. Job numbers came in at 517,000. The estimate was 185. What the hell does that tell you? It tells you the job market is freaking strong right now. If the job market is strong and you know the Fed wants a weaker job market, they don't want to push us into a heavy recession, but a light recession would make sense to keep pricing down. Okay, job market extremely strong. That's going to tell me that today's got to be a red day in the market. The fact that puts outweigh calls going into today with today's expiration tells me that today could be a red day in the market. So yeah. The levels I'm looking at, again, the SPY is sitting at 412 right now. The next level of support should be 411. If we break 411 going down, you will see 407 today. If 411 or plus or minus 20 cents acts as support, then they will likely buy the dip and you're going to ride it up to 415. But that's how you come up with the complete strategy. I'm just going to go down right now, see what kind of questions we have. Good morning. Good morning. Can we look at the SPY? Yes. Okay, someone's asking us to look at NEO and X levels. So I'm not actually going to pull up the levels for NEO this morning. I can tell you NEO is in the range of Chinese stocks. And I mentioned the other day, Alibaba, Baidu. I mean, these stocks went up. Chinese New Year was closed for, the market was closed for 2 weeks. These stocks were ripping higher when the Chinese market was not going higher. So understand it makes sense for them to come down. I'm not a fan of NEO. Let's keep going down here right now. Thank you, Matt, for taking your time out every day. These videos greatly appreciated. Totally cool. I appreciate you guys watching with me. Again, I would rather answer questions for a 30-minute period every morning rather than talk. I mean, SPY levels are important because you want to know when your stocks have peaked, when your stocks have found support. The earnings, extremely important. Amazon, Apple, Google, all missed. You know when the last time all three missed? Well, Apple hadn't missed earnings in like 7 years. So to put all three of those companies together as a straight miss, and you're telling me that the market should find support even though the market ripped for the entire month of January, just does not make sense. Just doesn't make sense. If it makes sense to you, then you know, more power to you. But there's no simple fact that they should continue to buy the market. We're getting bad news. We're getting strong jobs, which means the Fed has to be just as hawkish or aggressive. So if they're going to continue to buy the dip today, they're going to do it without me. Any lottos for today? Oh, that's a great idea. Let's look at lottos today. Meta, my best. What'd you say there? Money for nothing. Meta, my best buy. You mentioned it under 100. Yeah, I mean, I always was a huge Meta fan. I knew institutions were buying Meta at 215, at 202, at 182 on the way down. So when you're getting in close to 100, I mean, it's crazy. Apple's giving strong guidance. Yeah, I mean, Apple gave strong guidance. I mean, what's her name? The AMD CEO, she gave guidance year over year. They were looking at like a 28 to 32% increase. It came in on somewhere between 11 and 16%. So yes, they give guidance. They give guidance to what the institutions want to hear, what the analysts want to hear. So yeah, they're going to tell you marginal guidance is 43% next quarter. And when they come in less than that at 38, at 39, at 37, they're going to say, okay, well, we got hit with additional costs because of COVID spikes in China and worker strikes in China, or unionized workers in Australia for Apple, or unionized workers in the UK. Amazon is seeing that problem too as well. So, I mean, they're going to tell you what you want to hear as an investor. Does it mean it's coming true or to fruition? Not at all. So again, I happen to think the market's going down today. Here's your chart right here, pre-market on the SPY. So if I'm going to look at lottos, and here, let's talk about the lotto strategy. Lotto strategy is it's expiring today, whatever options we're looking at. So the first thing you do is you come up with your market analysis and you say to yourself, well, when the SPY is in no man's land, I'm not going to trade a lotto. So if I'm going to be bearish on the market and I'm going to look for lotto puts today, right, that the stock is going down, I'm going to say, okay, I'm looking for a bump in the SPY at open. So we're the 411.80 range right now. I would take my first action at 412.50, which could act as rejection. And I would load on maybe twice as much at 414 if we make it back up there. So that's number one for the strategy. Strategy is I think the market's going down. Strategy number two is I'm looking for entry point. Entry point is going off spikes. While the market is going higher and I want to play puts, that is my entry point. So 412.50, 414 would be a good entry. It would spike on open. That would give me good entry. Again, I want to see it reject on the 1 minute. So then strategy number three is find a stock that I think will be more heavily affected than like a Starbucks, which will be plus or minus 1%, which means I want to find more of a speculative play. So I would turn to stocks like a Roblox or a DraftKings or an Upstart or an Affirm, because understand, like yesterday in a positive green day, you had Affirm, Upstart up 25%, Carvana up 33% on down days where they're going to sell off. If today's a down day, and you guys know I like Carvana, but if today's an outflow day, I would expect Carvana maybe to drop 10, 11, 12% today. Yeah, one single day of trading. So again, that's one of the plans. Let me just see. Snap is already down 4%. Snap has earnings next week. We already know advertising is tough. So if market was bought up and Snap maybe went to even from being down 4% pre-market, or maybe it gets cut in half and it's only down 2% at its best today, I would go into Snap puts. Yesterday I was in Snap calls. Today I would be in Lotto Snap puts. Why? Because I think Snap has the ability to drop 8% today. So if it's only off 2% on some type of open or market pop, and then it goes down 8%, I'm looking to return probably like 120% on a lotto play there. Again, I would stay away from Chinese companies. SoFi I actually like, so I wouldn't be playing that. Yeah, I guess Carvana, which was just flat, actually fell, so it's now down 7%. So again, I wouldn't use Carvana as my play today. I'm just looking. Roku is too big a company. Boeing won't have enough movement. Palantir. Okay, TDoc. TDoc might have some good movement today. So I'm looking at TDoc pre-market. They've been buying the shit out of this company. So again, if today is an outflow day, I could expect TDoc to give back maybe 10% today. So that might be a lottery play. Again, I would have to find strategy, meaning I'm looking for the pump on open. I'm looking for the SPY to confirm rejection. And at that point, I might enter into some TDoc puts or something to that extent. Again, I'm looking at Snap, TDoc. I'm looking at Apple, but longer term, I don't think I'd get involved today because sometimes what we see happening is earnings come out, falls off a cliff, tends to rebound. However, when you look at it 3 or 4 days later, it's at a lower point. So again, I'm not going to get into Apple puts it open or Google puts or Amazon puts it open, but I'm going to have them in my mind to maybe get in later in the day. If I see the market pumping again, and then I see some type of resistance, I'm going to say to myself, okay, go out a week, go out 2 weeks and do something like that. With that said, I'm heading over to Discord now. You're more than welcome to join me. I hope Romeo is doing a live stream today. I'm not sure. I know his live stream the other day got canceled because he just had too much information or too much something came up. With that said, he goes on live 2 to 3 times a week. He does it once live for public. Please join the Discord. Learn how to use the Flow and Algos room. That's the same tools that big money uses to determine whether they're buying calls or selling puts in companies like Tesla, Google, Amazon, Roku, Netflix. So it's all to your advantage. So please take advantage of the tools that are there to help guide you in the market. And I'll see everybody 9 a.m. video, 11 a.m. video, and we'll be back at 2 p.m. to wish everybody a good weekend and see how the market closes out. Have a great Friday day of trading. Please hit that like button.